Yeah, so at Broadhaven, we invest into early stage fintech companies globally. So in addition to investing in the US and Europe, where we've seen a lot of fintech innovation in all sorts of areas of the market, we've also done a lot in emerging markets like Latin America in particular, done some investing in Asia and Africa as well. And I think one thing we've seen is that particularly in these markets where there's a lot of underbanked consumers, people who are not being served properly by traditional financial institutions or just being ignored, financial services and fintech is really playing a role to help them get access to credit, get access to mortgages, access to car loans, things that they really need to do to be able to build income and kind of live a life where they can interact with financial services. So really excited about that. Another thing we're actually really excited about, particularly in LATAM, we've made a number of investments in companies that are also kind of outside in financial services companies. So things that are solving real problems. One example is a company called Covey. So Covey is a car leasing marketplace for Uber and Didi drivers in Brazil. So they enable on-demand drivers to get access to weekly car leases, and then they can lease a car, drive for Uber or Didi. They wouldn't have had access to credit otherwise to be able to rent a car, own a car. So things like that where they're solving real world problems, but then integrating or embedding financial services. Really excited about that. And then certainly the layer below where there's the infrastructure around payments or giving companies the ability to embed financial services like a Covey into the things they do gets us really excited. And I think the emerging markets in particular are solving a lot of those real world problems for fintech. Yeah, I'll separate that into both the kind of the fundraising perspective, because I think the fundraising side of the VC world is a challenge. We also invest in funds. So we invest off our balance sheet into companies and funds, and we incubate businesses mainly in the asset management space. And I think on the fundraising side, particularly for smaller managers, we're seeing a much more challenging fundraising environment. We allocate to funds ourselves, so we see it. We like the emerging manager ecosystem from a fund perspective, but it's certainly a more challenging time, right? LPs are, particularly institutional LPs, are challenged with liquidity. The denominator effect is real. But I think it makes it a tougher landscape for funds to raise. Now, at the same time, I think also a pretty interesting opportunity in this current vintage. So we'll see how that pans out. But I think it's certainly a tougher time period than it was from a fundraising perspective. In terms of other things that VCs are dealing with on the company side, either with existing portfolio or new portfolios, is companies who raised a lot of money. Do they have the burn rate to handle and kind of make it through current time period, or are they going through a rough patch? And how do you extend the extend the runway and enable them to kind of figure things out right now? So I think VCs are also trying to figure out what to do with current portfolio in this time period, which is different than it was the last few years. Yeah, so a big area of focus for us, in part because of my background on the operating side at a company called iCapital, which was enabling the private wealth community to access private markets, so investing in alternative investment funds at lower minimums and leveraging the infrastructure of a platform like iCapital to do so. I really think alternatives are going mainstream. So I think private markets is really going to the wealth channel, wealth community, and there's a whole infrastructure that needs to be built around alternative assets. So what I mean by that is, just like you saw other market structure evolutions, equities, fixed income, derivatives, undergo kind of the innovation of technology, changing the way that people from pre to post trade buy and sell securities. I think the alternative space is really going through that same process from pre to post investment. So really excited about all the innovation that's happening, that's enabling more investors to access private markets. It's a good thing for funds as well. Funds are now able to go to the wealth channel, raise capital from the wealth channel. Certainly see that with the Blackstones, Apollos, et ceteras of the world, those large asset managers who are working with the wealth channel to grow their assets. Blackstone has about a fourth of its $1 trillion of AUM from the wealth channel, working with private banks, family offices, wealth managers, RIAs. So I think you're seeing a ton of innovation there. And then now, particularly post-investment in the alt space, the private markets data side is really interesting. There's a lot that can be done around innovation with private markets data to make things more transparent, potentially more liquid, around secondaries. So really excited about that entire value chain. We've made a number of investments in that space. I believe we're one of the largest portfolios of alts-related companies of any VC at Broadhaven Ventures. So we really like this space, and I think when you think about the dynamics of private wealth channel currently being at $4 trillion of AUM allocated to alts in 2022, projected to get to 13 trillion by 2032. So there's going to be more and more assets going into private wealth, into alts, particularly from the private wealth channel. And I think that's a space that's ripe for innovation.